Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets, University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, kind of a busy week for us. Livestock slaughter, cold storage, and cattle on feed numbers. We'll get to all of that coming up. But to recap, or to kick us off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, cash cattle were up $1.15 this week. Those feeder cattle markets were anywhere from $1 to $3 lower on the week. The April live cattle futures contract was down nearly $4 this week, and the March feeder cattle contract was down almost $5.25. Box beef prices were also down this week. The choice box beef price fell $8.76. That was on weakness in all the components of that box beef price. On the hog side, cash barrel and gut prices were $2.60 higher this week. Yet the April lean hog futures contract was down nearly $5.40. We did gain on the pork cutout value this week, up $1.93. That was really led by what were some stronger belly prices this week.
I think it's been an interesting conversation, or it's been really interesting to watch the markets this week after we talk about what happened following the invasion of Ukraine from Russia. I think one thing it's done is really highlight the volatility that we have in the markets. And while there are obviously greater geopolitical concerns that are leading our worries or our concerns, I think producers have to also talk about the need for risk management in terms of markets and volatility.
Yeah, so I often remind folks, volatility isn't bad. Without volatility, I know how to market your commodities for you because it doesn't really matter. Prices don't change very much yet. When you look at where we're at this week and we see big run-ups in prices and big declines in prices, I go, those are opportunities to do risk management. We certainly know that this week shows us just how volatile these prices can be, and really across the board as a result of Russia attacking Ukraine. So I'll say we're not done with volatility. I wish I had perfect foresight in how this conflict unfolds going forward, but to say that ag prices can't be continued, their volatility we've seen this week is just not true. So producers need to look at their own operation and determine how much risk they can really stand.
I mean, when you think about the Ag Outlook Forum has been going on this week, we talked to Seth Meyer post his early presentation yesterday. And if you want to hear Seth's comments talking about what their projections are, what they're anticipating for 2022, you can find those on our website. But for those comments in that report to have really little to no implications in the markets because of what's been going on geopolitically, is really been interesting to watch, especially from the market and the numbers nerd inside of me. Yeah,
absolutely. I mean, if you can't get excited about markets and how they're moving right now, you're never going to be very excited, because what a roller coaster ride. And I will say it comes both ways, right? So opportunities and challenges both. The hard part is what was the right answer yesterday becomes the wrong answer today. And that's where I don't like the risk, the magnitude of the risk that we see right now. Yet again, I will keep saying volatility gives us opportunities. It also gives us challenges as well. So it might be a good time for me not to be in the ag business right now, just because I wouldn't like all that volatility for sure.
And I think also a good time to have a conversation or take a close look at your risk assessment for your operations, not just for 2022, but looking ahead to 2023 as well.
Yeah, that's correct. I think I don't care what commodity, cattle, hogs, corn, soybeans, in all cases, you can start to go, do I want to be marketing longer term? Because we've been in a period of what's been some higher prices, especially on the grain and oilseed side. There's been a lot of discussion of whether I should be marketing my new crop that's going to come out this fall. And I sometimes say, well, yes, for sure. But you might also want to look at that 2023 new crop corn and soybean supply as well, and see if I want to market any of that. I know those prices are lower out there, but still might be a opportunity to lay some risk off, at least a portion of the risk off on a crop that you haven't even thought about putting in the ground at this point.
All right, let's talk weekly slaughter numbers. As we take a look at last week or this past week, down a little bit, but nothing too major.
Yeah, that's right. If you start on the cattle side, USDA is saying for the week ending February 26th, we'll have a run of 647,000 head of cattle. That's actually down just 13,000 head from where we were a week ago, and just 18,000 head from where we were a year ago. On the hog side, a run of 2.507 million head of hogs this week. That's up 9,000 head from a week ago, and down 142,000 head from where we were a year ago.
Cold storage was our first report of the week. As we take a look at those numbers, it looks like we are seeing at least some tighter supplies on the pork side of things.
Yeah, for sure. When we look at what we got out of the cold storage report for the end of January, all in all, it's good news for us from a meat supply standpoint. If we look at beef ending stocks for January, they were up slightly, but just marginally relative to where they were a year ago at this time. On the pork side, we actually see pork stocks continuing to be below year ago levels. We were down 29 million pounds on pork ending stocks. For pork in particular, boneless hams were down pretty hard in the report that we got out for this January data.
Livestock slaughter, as we take a look at that, and showing really some decline in productions. But I guess my question is that just because our numbers were a little bit higher at the beginning of 2021 than they are maybe right now?
So to an extent, although I think we're starting to begin to see what's going to be weaker supplies for both beef and pork as we go through 2022, we may not see the same kind of declines continuing all year long, but I think we're starting to see a little focus here. You and I haven't talked about year-to-date cattle and hog slaughter just because it's so sensitive out of the gate, but this livestock slaughter report gives us a start to begin to do that. So cattle slaughter down 1.6% in January of 22 relative to 2021. The only outlier there on the cattle slaughter side would be beef cow slaughter that was actually up 11.8%, just continuing to remind us that we're having pretty good runs of beef cow slaughter. I think dry weather's certainly a contributing factor to that number. When you take what was also then a 0.4% decline in cattle dressed weights for January of this year relative to a year ago, you end up with beef production down 1.9%. So fewer beef supplies. On the pork side, it's even stronger. Pork production down 8% as hog slaughter down 7.4% in January of this year relative to a year ago, and hog dressed weights down 0.5%.
Scott, to round out our reports this week, cattle on feed numbers, and maybe it's okay that the report's just a little bit on the boring side.
Yeah. So exactly. There were certainly some folks thinking a lot of cattle on feed, a lot of cattle placed in feed yards in January. The report confirms that, yes, we're up. So on feed as of February 1 was 100.8 of a year ago. So up slightly relative to a year ago level. Comes right in alignment with pre-report midpoint estimate that was 100.9. Placed in January was actually came in at 98.8. There was a big range in that pre-report estimate from 97.4 to 104. So 98.8, I think, actually a little below the midpoint of pre-report estimate, but not that far away. Just reminding us that, so we're still not to where we've worked through all of these feeder cattle supplies that I think as we get later into 2022 and early 2023 will be where we start to see supplies a lot tighter and maybe a lot higher prices as well.
It is going to give us plenty to talk about over the next few months and year.
I think it could get very exciting as we get further down the road. And again, I keep reminding folks, been talking about what's coming, and I just want to remind us we're not there yet. And I think there's some good possibilities for some higher prices as we get later in 2022.
I think the phrase for 2022 in terms of the livestock sector is probably going to be risk management, and also a reminder to maximize the upside potential when you can.
Yeah, I will. So while we're on risk management in particular here to cattle, I'll say I know a lot of particularly smaller cattle producers probably aren't doing a lot of risk management. I would just encourage them to look at LRP. It's a product provided by USDA's RMA. So your crop insurance agent can sell you LRP. Why do I talk about that? It's in many ways kind of like a subsidized put option. And I say that to remind us that we can still take advantage of upside potential. The only thing that LRP contract does is you're going to pay a subsidized premium for that contract. But if markets are higher, you take advantage of those higher market prices when you get there. So it's a good way to leave upside available to you, yet protect some downside. It's just what's the cost of protecting that downside that you have to evaluate.
Scott, that'll do it for us this week. As we look ahead to next week, what are we talking about?
Yeah, we'll start next week with the Restaurant Performance Index. We get a little bit of U.S. and Canada cattle and hog inventory report out next week, and then we'll finish the week with another jobs report.
All right, we'll talk to you next Friday. Have a great weekend.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there, the good ones and the bad ones, because we read them all. I promise you. Go to brownfieldagnews.com to do that. And then also you can find our podcast at brownfieldagnews.com/podcast if you're looking for some great listening material. Have a great weekend. I'm Megan Grebner for Brownfield.